The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we get the Dow Industrials up 139. You get the NASDAQ up 51. S&Ps are up 16. We have the gold contract trading up $6 at $1,323 an ounce. We have silver up 52 cents, $18.36 an ounce. Platinum's caught a bid. That's up 26 bucks, $1,004 an ounce. Light sweet crude up 46 cents, $48.31. Notes and bonds just continue. They will not back off, folks. You get the notes flat. The bonds are up 12 ticks. And good old King Dollar is down 616 ticks. We have the oil numbers coming out at 10:30. Tom O'Brien, what's going on?
Good morning from the other side of the office. Hello, hello.
I'm telling you, man, I don't know. I guess once I start talking, it sounds weird, man.
You're a busy guy that talks a lot, so I bet your voice is struggling just to repair, but I'm glad you feel good. That's what's important, and hopefully it'll just take a little bit while.
Yeah.
A little bit longer than you want with all the action you got going on all day.
There's no doubt.
Yeah.
There's no doubt. And we talk action, folks. Let's go over to our man, Mr. Kevin Hinks, as we do every trading day to get ourselves kicked off around here. And, of course, don't forget, folks, right here at TFNN, 12 to 1, every trading day, you have swim lessons. Now, if you haven't test drove the Thinkorswim platform, folks, it's a phenomenal platform. Come over to our website. You can hit the banner. You can test drive it, paper money, all the above. You can see how this platform works. You can see how sophisticated it is, yet how easy it is to maneuver. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How is everyone doing?
Doing great, man.
Morning, Kevin.
Hey, you ready for a good 4th of July?
Here we go. I'll tell you what, Tom. I was listening to your little introduction to the markets that come out at the beginning of the hour, and you couldn't be more spot on. The bonds are telling us something here.
I know,
so we all have
man.
to be cognizant of what's going on. This market gives you information. Whether you listen to it or not is a different thing. But these bonds are telling us that something's wrong in Denmark. Literally, something's wrong in Denmark.
Literally.
And these bonds, these poor bond traders on the CME have got to be pulling their hair out. They get a rally and everything else, and the bonds will not sell off.
They will not, and it's just amazing, man. I mean,
Right.
This is serious business, man. It's like, it's so hard, folks, getting your head wrapped around that rates are going to continue down, but they are. They are.
Right.
It's like, really? Yeah, they are.
The lower for longer is real.
Wow.
And it's not going away.
It's not.
It's amazing, though. It really is amazing because think about it, Tom. Bonds are turning into their own micro story,
Yes.
right? Now it's going to have a macro effect on the market, but they're starting to turn into their own story. They're off on their own now. And it's going to affect everything we do.
Listen, I agree, man. I'm so bullish on hard assets, Kevin, and I'm trying not to get excited because in the market, folks, I don't like to get excited about anything, really. I just like, because you win or lose, and, and I'm trying to hold myself saying, no, don't get freaking excited here, man, because, that's when things can go wrong. But the way these bonds are trading, man, well, and it's just not here, folks. It's in the whole world. That's what it really comes down to. I'm looking
Exactly.
and it's like, okay, if you and I and Tommy were over in Europe right now and we were running a big fund, well, we know what we do. You're getting money for nothing on a negative rate over there. We put it right into treasuries and have a risk-free trade, and you're sitting on the freaking Riviera, making 2% leveraged up, folks, and that's what big funds do. And you're going to make 10% risk-free or something. That's huge money in this environment.
Right. It's really, when you break it down like that, Tom, it's really not rocket science.
No,
right?
exactly.
You buy the bonds that, you sell the bonds that are under, and you buy the bonds that are still, 1.5% over.
With the same duration.
Right.
Yeah.
Same exact product.
Right.
Really not, it's pretty easy. But I tell you what, Tom, we're going to talk about what everyone's talking about this week today on the show. VIX.
Oh, good. Yeah.
Right? And we're gonna go through that and go through what that means and everything. And we're gonna talk about Nike's earnings. How about Nike's earnings?
Yeah, I know.
Remember the three-headed monster of earnings, right? The number, the expectations, and then don't forget that third thing, which everyone forgot today, the conference call where they guide in the future.
Right.
That stock was down big, and then the conference call started. They guided much better. Inventory's going down. And so look at the stock now. So very interesting day about Nike.
And what Kevin's talking about, folks, so check this out. Nike last night had closed at $53. It was trading at $49 last night. Now it's at $54.67, and it never got down there today. Okay, so yeah, huge, man.
Amazing. But that's that thing. That's why you got to be patient, and it's about guidance. Remember, stocks are future indicators, right? 6 months. So Nike came out with a very strong conference call after the earnings report. So, yeah, amazing.
It's going to be great hearing about the VIX today because you certainly have got big action. The VIX has gone from, the last week from $17, folks, up to 26, back to 17. So right here, 12 o'clock, you can listen to my man Kevin. Kevin, thanks so much. You stay right there, folks. We're coming right back.
Have a great day, guys.
You too.
Thanks, Kevin.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, we do appreciate you growling a problem with us out here. So, Tom, we're going to have oil numbers this morning.
To the excitement. Why not?
Totally. I already sold the contract.
I was just going to say, do you have anything going on yet? Nice.
I did. So this is what I did, folks. Let me get this up here for a second. So I sold. This is going to be a dicey one. Well, hey, listen, we'll find out. I like them.
Aren't they all a little dicey 10 minutes before oil numbers come out?
Yeah, well, this one was different.
Right.
'Cause what I did is I actually sold it this morning. And I sold the I sold the daily. So on the on the contract, folks. Okay, there's let me get this up here for you. 1 second. So what you have is that you have a 43 to a 48. That was the daily. It's always, you know, the 11 o'clock one, Tommy, wasn't out yet. Do you know what I'm saying? When I was doing this.
Sure, you were trading it, you know, before that spread was available, only because I think they're available for like a couple of hours. I mean, that's their short-term vehicles. Sure,
9 to 11, it would have been available. So what I did is that I took, let's see, I'm in at 47.85. So it's right. It's right where I actually sold it. So I was risking $11 per contract. I think that's what I did. Yeah, it was cheap money. Yeah.
Yeah. I just walked through. I have the platform up myself, and you know, that's, and if people are out there, you know, you're trying it, you just put in the contract, and like you can see, I'm sure on your screen, you know, where you just put in one contract and the price you're going to sell it at, and it breaks down your max loss, your max profit. So if you're selling the crude oil spread that goes from 43 to 48, you're selling it about 47.90. You're selling it essentially almost at like the ceiling, right? 10 cents off of the ceiling.
Exactly.
So you have 10 cents of risk. But here's the thing, right? Here's the thing. Oil's trading at 48.54 right now.
I know.
So there's 54 cents of movement required before you have any intrinsic value.
Right.
So that's, I mean, but that's why you get risk 10 for a max profit of 490 if oil tanks to $43 by the close at 230. So there are all your factors, and then you get to decide. But yeah, if you're looking for a big move, we know that oil can move at least 50 cents. I mean, that's almost laughable, right? As I chuckle.
Well, and because of the last 2 days, it looks to me that oil's an ABC structure on the way down. So I'm saying to myself, hey, if it's 50 cents, 60 cents, I break even. I get $1, guess what? You know.
Yeah, if you get $1, you make 5 times on your money.
Exactly.
And you know, in this environment particularly, you can always say this, but in this environment particularly, you never know when there could just be a huge movement in oil, for sure.
Exactly. Which, you know, so we'll see where it shakes out. But I
can see why you'd say it was a little bit dicey, though, because that's a
huge premium. Yeah.
Low risk, low probability play, but if you get the moves, which, you know, we all know they're going to happen inevitably, whether it's a matter of weeks or something, but there's, you know, $1, $2 moves, especially on the news when inventories come out, the day inventories come out, for sure. So I like the trade. Yeah. I like, you know, I'm in the similar camp, right? I like to make those, you know, low risk trades that are defined with, you know, multiple rewards if they come true.
Right. When I look at it, if I can risk 100 and make 4, that's great. You know.
Yeah.
But
right. And I think that's because, just to put it in easy perspectives, you know, it's situations that you're good at analyzing, that I think I'm good at analyzing, is that you can recognize when, you know, a situation is is valuable at that ratio, where sometimes it's more difficult, I think, to estimate when you can be 75% correct, where you need to risk 3 to make 1. Can you accurately predict that you're going to be 80% correct, even
Nope.
if you're, getting the market 5-10 points in premium? That's tough, right?
It is.
But maybe you can say, you know what, I can be correct in this 1 out of 3, maybe 1 out of 4 times, maybe 1 out of 2 times. And that's I think what you're comfortable with, which I am too.
Yeah,
just to put
there's no doubt, because there's more trades, and it's
just more, and that's just putting it in terms of how you're thinking about it, which is you're just more comfortable saying, in the long run, I can be successful 35 to 40% of the time, and if I'm only risking 25 cents to make 75 cents, or et cetera. That's kind of the process,
right.
And that's what you want to think about in every trade. I'm risking 70 cents to make 30. In the long run, am I going to be right 70, 75, 80% of the time to make money? That's and then you make that decision.
And inside that context, that you'll make more than that, because that trade can make more than that, folks. But you couldn't expect it, So you never know.
And that's why you want to go in the long run. Like you
right.
really want to do, like, if I make this trade every day this month, something like it, is that going to be a good trade? No.
Right. Right.
And I think, if we all know that if you made this trade every single day that inventory numbers come out, who knows if it'd be profitable, but you're definitely going to have huge days when it's going to move, a buck or two at least in that, for sure.
That's right. And what happens, folks, and this is what's key to wrap your head around too, is that I have until 2:30 in this trade, which is really cool.
Yeah, I agree. For 50 cents of premium.
Yeah.
I mean, yeah, if you've watched oil at all, you know that, I bet that there'll be 50 cents of movement one way or the other today in the next 6 minutes, right? For sure.
It's a beautiful thing, no doubt.
That's right. Let's see if it happens.
And folks, if you haven't tested the 8X platform, come over to our website. You hit the banner, bring it up. As Tommy and I have been saying, bottom line, this is a great time to test it out because the volatility is out here, and it's out here everywhere, and it's not going to stop. And in fact, swim lessons today, folks, should be a fabulous program, because what we had happen here, which is very unusual, is that when the market was continuing down, what day is today? Continued down on Monday, right? It was down Monday. Hold on one second.
Yes.
Yeah.
Yes. Monday was the second day that there was a big escalation down.
Right. The VIX was going down also, which is just insane. It's just showing that there's zero fear, but...
And then especially coupled with the fact you get 2 days of rising markets following that, where it's like, how does that happen, right? It's like the second day of fear with the banks in Scotland, Bank of Scotland, Royal Bank of Scotland, and everyone's like, no, we're fine. And then the next 2 days we're like, yeah, we're so fine. We'll just go up like 400 points in the Dow. We'll see what happens.
There's no doubt, man. It's pretty wild watching this whole thing shake out. And bonds, folks, as we've been talking about, the bond market is also saying, guess what? Something is not just quite
like
right.
Like you guys were saying, like Kevin and you were saying both at the start, I totally agree. It's just, you know how big of a market that is, and at least make sure you're paying attention to it, because that's not going to go by the wayside, whatever this market ends up doing. That's going to be a critical factor, and it's going to be revealing a lot, I think.
It is. Sure. And, you know, the bond market is so much bigger than the equities market. I mean, the bond market, I don't know the exact number, but it's huge, folks, much bigger. Let's go inside the Dow Industrials in the see with the strength versus the weakness inside the Dow. The only stock that's negative is Home Depot. It's down 4/100ths. Everything else is up. Nike, what a trip that is. Those poor people that sold it last night. I know. Hey, you stay right there, folks. So Tommy and I are going to be coming back with those oil numbers for you. Dow right now is up 174. The NASDAQ is up 60. S&Ps are up 22. We're going to be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. This is always gets volatile out here, no doubt. We've gone from 48.68. That's where we are right now. We went down to 48.10 for a split second. You're at 48.68 right now. Let's see. I'll show you this. This is pretty amazing, actually, man.
Yeah, I'm watching it jump around. I don't have the news, but and I think it actually even spiked lower than.
Oh, it probably did. Yeah, I actually it did. Oh my God.
Pull it up. Yeah, it 48.01.
Okay.
48.01.
Well, we'll see. Let's pull up what they're having to say here. Let's see what we got here. CLQ6. Okay, so inventories fell 4 million barrels. EIA said we don't know what it was supposed to do though. Just yet we don't know.
Yeah, we'll pull it up.
Let's see. U.S. crude output fell 0.63% to 8.6 million barrels. Refinery utilization rose 1.7%. You're at 48.80 right now. It's catching a bid.
Yeah, fast movement, man.
Yeah. So, hey. $111 down the tubes. Not
yeah,
yet.
No, listen, you have all day. Okay, so it's only been 60 seconds since the news came out. before you throw in the complete towel of your daily
I'm not
option,
throwing in the towel. I'm just saying that that's. I would rather that.
Of course,
that type of deal than.
It's not a good. It's not what you were hoping for as the news come out. Of course. But and just to talk about the trade, part of what you're doing is you're trading volatility, right? You're expecting a big move and then you're choosing a directional bias,
right?
And I think the move speaks to the fact that paying 11 cents for 50 cents a premium with that much market action, that's not a bad trade when you can see this type of movement within 60 seconds of placing the trade.
Yeah, right.
It's pretty cool. It is.
Now let's go look at the XLE and see what that's doing to the XLE. So the XLE is up $1.24. This had bounced yesterday with light volume. So the XLE, folks, what's going to be crucial here is a 67.54 level, if it can hold that. Because if it can hold it, that would say that it can get up to the last swing point out there of 69. Yesterday, last 3 days were going up on light volume. So we'll see how that baby does shake out. I will swing over to natural gas, because natural gas comes out tomorrow. And natural gas, you talk about getting a bid yesterday, Tom. I mean, Tom. Yeah. And today. Natural gas went to, $2.97 today.
Okay, I hadn't looked at it. I hadn't.
Yeah.
Nice. Good. Well, that means we can definitely get some action tomorrow when those numbers come out, right?
Yeah,
for sure.
Totally.
Yeah.
So market-wise, let's take a look at this market and see what we have going here. So you have the Dow right now up $1.79. The Nasdaq is up 61. S&Ps are up 23. If we take a look at this Dow, whoops, sorry about that, folks. Yeah, so we're up 179 in the Dow. The cash S&P right now is at 2057. I'm figuring this thing's going to try to get up to about 2075, folks. And where 2075 is, where I'm looking at, is that I'm looking at the low of June 20th, because we're already at the 2057 mark. So that means that we got into the low of the 16th. And it's like, okay, this wants a little bit higher price. The volume died in the vine yesterday. We did 1.1 billion versus 1.3 the prior day. And what you're going to see out here today is that we're actually going to do even lighter volume than that. So as we commit to, we got window dressing happening out here. I think it's the first day of window dressing. This is the 28th, right? Or the 29th? Let me see. Yeah, 29th. So this is the first day of window dressing. We get today, we get tomorrow, and then what we have, of course, is coming into the July 4th weekend.
And just so I was trying to find those estimates even myself, just Googling, and it's not the actual estimates, but Bloomberg surveys projected that crude inventories might have fallen 2.5 million barrels, and I think, would you say it fell 3 million barrels? So pretty close to even in the ballpark of what Bloomberg surveyed. Okay. Even though it's trading over, if you want to pull it back up, over 49 now, so quite a move for sure.
Yeah, and let me see. This. Yeah, so what would have happened? So this gets intriguing, folks, because I didn't look at the other side of that trade, but because of I wonder if there's what I was going to just say is that type of premium, what I was paying from where it was trading, maybe a long position might have just got in the money there. Let me pull this up 1 second.
Are you talking about looking for a similar trade to the top side?
Yeah.
So there was an option. It's a little bit different because there would be and if you want to pull it up and maybe try and walk it through as I explained it, and I'm looking at in that same daily one, there's one that goes from 48 to 53. Okay, so the only difference is
exactly. That's what I was.
It would have had about 50 to 55 cents of intrinsic value in it.
Right.
out of the $500, you know, so you'd be paying $55 of intrinsic value, and you'd probably be paying a similar 10 maybe to 15 cents of premium, right? Because your risk reward would be so nice. So maybe you would have been putting up about $70, getting in at $48.70 or so.
Yeah.
To risking 70 to make $430. And that position right now would have about $40 of profit, trading at about $49.10, which would be $1.10 above the floor. So there's your 110, right? So you know, you could have made $40 on a $70 risk trade. So very different for sure. But that, you know, and there's other options as well. But that would have been your lowest risk among those. Now, again, we're only looking at the daily ones, right? The daily ones have $5 of spread in oil, which is a big spread. Right. So they're $500, and even there's a $10 spread one that goes today from 43 to 53. That'd be a $1,000 spread in terms of the risk reward. So you could drill down much lower to the time frames if you didn't want to be dealing with. But you know, if you were looking for a big move to the upside, the benefit of that trade to the upside with the 48 floor is that of that $70, right, only 15 cents is premium. So if you get a flat market, you're not going to lose that 70. But as we've seen, you know, you weren't looking for a flat market. So that would have been $70 you would have had at risk for sure if it decided to move against you.
Yeah. Pretty cool. Excuse me, folks. Okay.
I think we might have to get you some good interviews this afternoon, or maybe have you tag team and a partner for back and forth segments or something. Action packed.
I'm telling you.
Market action.
You stay right there. Tommy and I are coming right back, folks. Dow right now is up 164. You get the NASDAQ up by 53. S&Ps are up 21. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Excuse me, folks. Welcome back, folks. We have the Dow right now up 164. You get the NASDAQ up 53. S&Ps are up 20. And we'll take a look at some of these higher volume stocks in this low volume market, because what I expect you're going to see is another low volume day out here. Okay, so you got Citigroup's up 55 cents. You get Nike up 66. Apple's up 24. We get Micron Tech up 25. Marvell's up 40 cents. You have Chesapeake Energy up 9. Exxon is up 138. We take a look at some of the Dow stocks out here. You're going to see JP Morgan up 68. Let's go and take a look at some of those financials. JPM. Yeah, these are setting up nice. So JP Morgan, folks, you know, you're up 69 cents. We had come down off the high of $64. Hit a low of Monday at 57. You're at 60, and you've got an anemic volume. So let me go look at Bank of America, BAC. Same setup with Bank of America. Bank of America, actually, Bank of America, it looks like it's rejected the $13.17. You know, the way this, let me go look at this. One of the Tigers is saying that the 30-year right now is going after its highs, which would set up, yeah, which would, this is going to be wild, man. Because this market, folks, you know, it'd be very hard for this market to pull back this week as of July 4th. But the way that we're trading right now, it's getting very close, I think, to this C point of an ABC structure on the way down. And I wish it was Thursday, not Wednesday right now.
Okay.
Because it's not ready to shot yet. Do you know what I'm saying? Yeah. You know, because this can run right into Friday. You know, whether it's...
There's a lot. I mean, I look at it a little bit where, not that this is like an outlier, but there's stuff at work here where, like, you know, just because it's July 4th, and I agree with, like, everything you said for sure. But then, like, you just have to keep in mind that, you know, fear is out there that's probably not presented properly, as in it's not represented properly as well as it should, and you never know, maybe when that fear could kind of take over real quick. Just keeping in mind that this isn't your standard just market volatility coming into July 4th, in my opinion. It's, you know, there's other factors that could...
And what does happen, so what happens, folks, in a bull market, all the surprises are to the upside. In a bear market, all the surprises are to the downside. And if we're in a bear market, that's where those surprises will come to the downside versus the upside. Yeah. You know, so, and they're fast and furious. That's just how they shake out.
And we're not that far off from, like, basically highs. So
we're not. See, the most deviant thing, and this is where we haven't been off highs, folks. You know, if I bring this back up, this is what is an absolute mind blower about how it's actually so cool where we are. So we've been at this level since September of 2014. Isn't that crazy?
It is. Yeah.
You know, so we've had it's been a sideways movement. You know, my take on this sideways movement is, guess what? You know, it wants downtown, because every time that we're down there, it's building more cars to get to lower price. But thus far, guess what? It's a consolidation, and the bottom of that consolidation is, you know, quite a way down, though, versus you know, where we are right now. You know, it's a monster consolidation. It's 2134 on the high end just ballparking at 18.12 on the low end, folks. That is one huge consolidation, so.
Yeah.
Let's go over to the gold market. So gold just caught a bid, and it should, it's going to be a little bit more than this. We're up $10, but that's better than not being up. Let me pull this a little bit closer. It has the volume behind the move too. So on one 10-minute we did 6,000 contracts. The next one we did 6,800 contracts. We'll bring this back again. The problem here, if you're going to chase this, I'd be really careful chasing this gold market right now, folks, and this is why. So when we went up on last Thursday, this is what you're doing. You're going into an area that we had 18,000 contracts. So even though you see the price up $10.80, that is not enough contracts. Not even close either. So I think this consolidation, it'll build more cars. I don't see this going topside in a big way out here today. If I could break this down a little bit more, meaning the day. See, because these contracts, 13,000 were done between 13.27, right where we are, and 13.55. So with the number you'd use, folks, I believe it's going to be 13.27 flat. So what happens with volume is this. That's what we surged forward. And on one of those 10-minute bars, 13.27, it just didn't take any prisoners. Went 13.27 to 13.55. Well, the bottom of that bar right now is actually giving gold a hard time. We're at 13.2850. So if we could get into that by another $5 or $10, you'd go at 13.55 in a heartbeat. But that's why you see this area right in here right now getting a little pushback. So the XAU, the HUI, they got a bid underneath them. They're at the highs. XAU's up 325 at 96.51. Gold Bugs Index is up. Gold Bugs Index needs a little bit more. That's up 621 at 245.65. And that's over the highs, too. They're both over the highs. Let me pull up and see what the volume was yesterday on this. Yeah, the volume wasn't bad yesterday either. Not great, but it's going to need more volume. They both already have confirmed ABC structures on the way up. That's a longer ABC structure, but the bottom line is that they both broke the B point, broke them with volume, all of the above. So.
Can you take a look at some of those world rates and just pull that up?
Yeah.
Just with the bond doing such big things.
Totally. So right now, our 10-year is at 1.45. In the United Kingdom, it's 0.9%. France is 0.2. Oh, listen to this. Germany is 0.1. Oh, no. Germany's negative. Negative 0.1. Excuse me. Negative 0.1. Italy is 1.3. Switzerland has gone to minus 0.6. It's amazing, isn't it?
Yeah.
Now watch this. This is what's really bizarre, folks. The 30-year, our 30-year is at 2.2. 2.2.
Cool. Yeah.
That's unbelievable. Well, let me just.
So just looking at it, right?
Yeah.
In the last 3 months, that chart on the right on your screen there, in the last 3 months, that 30-year, well, you just said, no, I'm sorry.
I'll
just
put it back in.
I think the high was 2.7 on the 30-year,
Yeah.
so it's come down a full half a point in just 90 days, when everybody thought it was going to go up.
Yeah, sick. You stay right there. Tommy and I are coming right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 170. You get the Nasdaq up 56. S&Ps are up 22. And don't forget, folks, right here at TFNN, Monday, Wednesday, Friday, we do 10 hour. We start at 8 o'clock in the morning. We go to 5 in the afternoon. Tuesdays, Thursdays, 7 o'clock in the morning to 6 in the afternoon. You can get all that programming right on your cell phone. Just go to TFNN.com, hit Tiger TV. You're going to get great HD video as well as audio. And, of course, coming up next, we got our man, Mr. Basil Chapman. You're going to go from Basil to TD Ameritrade headquarters in Chicago. Then Steve Rhodes, Dave White, myself. And, of course, on Tuesdays and Thursdays, we got our man, Mr. Andy Heck, coming up talking commodities. So,
Today, right?
I'm sorry, what?
Did you say Andy Hecht? I said today's Wednesday, right?
Yeah. No,
Okay.
I said Tuesdays and Thursdays, yeah.
Okay, cool.
For Andy, yeah. So if we go over and we look at that commodity market right now, just to see what's happening, you get sugar. Man, look at that sugar. Sugar's catching a bid again. Sugar is at 20 cents a pound. Pretty amazing. That's up 4.5%. Nickel's up 4%. Silver's up 3%. You got heating oil up 2.7%. Coffee's up 2.3%. Crude's up 2.3%. Yeah, you get crude still. Let's go look at the crude market again. Let's see. So crude, for $49. Yeah. So it's hanging there at $49, man.
Yeah,
Not bad.
I had watched it, and I was gonna keeping an eye on it just to see if it's where, and it did have 20 cents of downward movement right off that peak, and it's kind of lingering there. It is. But the other thing to keep in mind is we have 3.5 hours of market activity, and there's a lot going on. It's like, unfortunately, we had that terrorist attack in Turkey last night. That's the third busiest airport in Europe.
Is it? Wow.
Yeah, which is pretty incredible. So there's, in terms of what could drive markets in a full day of trading, it's not even 11 a.m. yet. There's a lot, and we'll see. I mean, it's at $49. You need a full dollar of movement for any value, but there's 3.5 hours. So we'll see.
No doubt. If we go overseas, you talk about catching a bid. They've caught a bid over there. The FTSE's up 2.5%. The DAX is up 1.3%. Now the FTSE, the UK. So if you want to see how this got croaked and come right back, the day of the vote Friday, it went from 63.38 to 5,700, 57.88. Well, we're back to 62.97. So it's only, what is that? Oh, my God, that's only 43 points off where it started from on Friday, folks. That's pretty cool.
Yeah, it is. I like looking at that stuff, because we just get such large movements in one way or the direction or the other, and then everybody focuses on like one day, and perspective and context is very important.
Yeah, it is. And if we go over to the DAX, we take a look at the DAX. Now, the DAX can't go anywhere. Hasn't gone anywhere. It can. There's not a stop sign on it, okay? But watch the difference here. Now, what's so funny is that the way that the market is trading, Tommy and folks, is that the market is trading that the UK is not only going to be fine, but it's going to be better than Germany. That's pretty wild.
Yeah.
So as to the vote with, how these markets are performing, Germany, folks, the high was 10,340, and right now it's only bounced to 95.73. So dramatic difference, big time. Let me go look at the CAT for a second in France. Oh, you stay right there, man. Folks, I'm in. Mr. Basil Chapman's coming up next. And, of course, then swim lessons, Steve Rhodes, Dave White, and myself. Tommy, thanks so much.
Love you, man. Feel better.
Have a great one. Have a safe one. You stay right there, folks. Basil's coming right up with you. We get the Dow 154. We're going to be right back. Basil's going to be coming right up, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.